Welcome to the Stage Analysis members midweek video. It's Wednesday the 10th of August and tonight's video is going to be a special feature on the software group, as the group as a whole is beginning to transition into early stage one, which is known as stage 1A. So I wanted to do a feature on it as it's been coming up in the watchlist scans a lot over the last few weeks or so, or even the last month or so, as well as multiple other measures, the market breadth measures for the group starting to show some interest as well. We had the percentage of stocks above the 30-week moving average have a double top breakout last week and moved to bull confirmed status on that one, and also the bullish percent index for the IBD broad industry group moved to bull confirmed status on the PNF chart as well. And I think there was around 50 odd percent of stocks on point and figure buy signals within the group. So moving up the industry group rankings table as well. So it's an area I wanted to focus in on a little bit, as it's a particular favorite for the growth stock investors, the CanSlim traders amongst you. So I think you can get a lot of leading stocks come out of the software group over time. So as we've had such a deep stage 4 declining in many, I think it's an interesting area to have a look at, as there's, especially at the moment, there's, as I said, there's I haven't said it already, but there's a proliferation of stage 1 bases within the group, and it's a very big group. There's around up to around 400 stocks in the group, a little bit less, maybe 390-ish when you run the scan. And I'm sure there's more than that as well, but that does include over-the-counter stocks and some of the micro caps and smaller caps as well. So I've run a scan for the group and filtered out a fair amount of those sort of minnows and over-the-counter stocks, and just focused on the stocks within the NASDAQ and the NYSE. And I've got a group list of around 290, 280 stocks, I think, that I've then gone through and started to do some markups on the weekly chart. So I want to run through some of those tonight in using the relative strength rankings for those as a way to go through it a little bit quicker, as one of the key purposes of Stan Weinstein's method is looking for group strength. It's a really big, important component of it. And so one way that you can do that is, once you start seeing stuff moving up the relative strength tables and improving, is to actually delve into the group and start to look for what stage the stock is in, whether it's transitioning from stage 4 into stage 1 or stage 1 into stage 2, etc. And that will give you a really good idea of what's going on in the group and any kind of potential leading stocks within that area. As if there's many stocks within the group move into what we call a favorable rating, which is stage 1 or stage 2, then obviously that's a good area to potentially focus on. So with so many in the group actually moving into potentially the early part of stage 1, it could well be an area of focus later on in the year, with some obviously strong early movers that are going to come out into stage 2 and some that already have. So I think looking at it at the moment, if we go to the actual group chart here, I'll start with the weekly ETF. So this is IGV, so I think it's the iShares North American Tech Software ETF. So this is a pretty good proxy of the group chart itself. I think if I flick to the actual group chart here, you can see it matches up reasonably well with the actual index. So you can see the SCTR rating here. So this is the stock chart's relative strength ranking at the moment. It's up to 53.7, so around midway at the moment in terms of the rankings table, but it has been gradually moving up the rankings, as it was well below the 30 level a while ago. So as I said, at the moment we've had a change of behaviour in the near term, with many stocks starting to show signs of moving into stage 1, which is known as the early part of stage 1 is known as stage 1A, with a fair number of them starting to test their 30-week moving average as well. So, and in their term here, you can see we've had this, what we call a change of behaviour. So one way to identify the start of stage 1 is that we look for a change of behaviour. It's the same thing that we do in stage 3, and you don't always get it immediately at the start of stage 1 or immediately at the start of stage 3. Some of the basing can actually happen before that. So you can see in this case, we have had the base structure started to form earlier on in late April, early May. And then we've had this secondary move, which is our change of behavior now, which has taken it up towards the 30-week moving average. So you can see, compared to previous swings, this is actually, the recent move is a much bigger swing. So this now signals potentially the start of a transition from the stage 4 downtrend into potentially stage 1. Could still fail and continue on in stage 4, but obviously the early part of stage 1, it can tend to be quite volatile. So we could start to see a pullback back into the range. It could come all the way back in. It could even test the lows of the range again, or it could obviously form a higher base. So the ideal would be for obviously a sign of strength and for it to form a much higher base structure, to start to see a stronger base structure form here without it ever testing the lows again. But obviously you never know what you're going to get. So at the moment, with the change of behavior that we've had, all that we know is that we're potentially in the early part of stage 1. And so this then helps us to now zoom in on the group and start to look at the individual stocks and see how they're behaving, and whether there's lots moving into the later part of stage 1 and into early stage 2, or whether the majority are only actually just starting to move into early stage 1 or still in stage 4 itself. So as you can see here, the characteristics on the chart, we've still got this declining 30-week moving average. So this is the declining 30-week moving average here, with this dotted line here as the 10-week moving average. So at the moment, the 10-week moving average is still below the 30-week moving average, and it's still got quite a reasonable gap there. So we've got about 7% gap between the two. So normally within stage 1, as with stage 3, the majority of the time, it can take quite a while for a base structure to form. You don't often get V bottoms like we saw in the 2020 low. It tends to take a while for bottoms and tops to actually form. So a lot of the time you actually see these moving averages start to cross above and below each other multiple times before we actually move into stage 2. Not always the case. Sometimes you get a double bottom type move and you can move out into stage 2 earlier. So, but with such a steep stage 4 decline here, there's likely this zone of resistance above is likely to continue to put pressure on the stocks moving out into potential early stage 1 or into stage 2 even. So we potentially could start to form a higher base structure on here. If we drop down onto the daily chart, you can see this small change of behavior we've had recently. It's not quite as defined as on the weekly chart there. You can see if I actually go to the free ATR bands. So this has got an ATR band with a 21-day moving average. So this is the 21-day moving average in the middle here of the bands. And then each band is one ATR level above or below. So when you're above the 1 ATR level, which is this second level here, so you can see during a downtrend, you tend to stay below that the vast majority of the time. I've said this many times before, but then once you start moving into an uptrend, you start to get above that 1 ATR level and you start to hold above it, and it trades between the 1 and 3 ATR levels. So you can see at the moment, we've got a little bit of a change of behavior going on here, as we haven't actually been above that 1 ATR level for very much at all. We had that brief period in March where it got above it for a few days or so and chopped around and fell back below again, but we haven't had a sustained move like we have recently. So this is a signal that we've got a little bit of a change of behavior going on, and that's the fact that the base that we've been building over the last few months or so in the software stocks could potentially be starting to transition towards stage 1. But could still be a redistribution base. As I said, we could still be a base in stage 4, and we could make a continuation breakdown. We're still below this 200-day moving average here. So you can see we've still got 7% to go in order to get back to that 200-day moving average. But if we go back onto the weekly chart again here, we're still well below this declining zero line here. So the zero line is what was in the Mansfield relative strength chart when it was a flattened version. So when the Mansfield chart was in the book, you'll see it represented like this. The zero line was in the middle, and the relative strength line oscillated above and below it. So this is the same as that. It's just an unflattened version. The moving average is the zero line, so it's the 52-week moving average of the ETF divided by the S&P 500. You can do it obviously with a stock divided by the S&P 100, or you can do it by whatever you like. But the S&P 500 is generally our baseline, as it's a universal way of measuring relative strength against for any stock, ETF, commodity, whatever you want. You can just use that as your baseline and look at a chart, and you can see whether it's outperforming or underperforming the market. So at the moment, as I said, we've got a declining zero line at the moment still. So this shows that we are still in a earlier stage at the moment. So hence we've got a transition from stage 4 potentially into early stage 1. But obviously we want to see this relative strength line continue to improve, start to get back above that zero line, with it to potentially start chopping around and then continuing up and out as this moves off and out into stage 2. But at the moment, just a move into early stage 1. So we could have a lot more back and fill to go for a while yet, chop. But at the moment, it does look positive, but it does always look positive in the early part of stage 1, as you get we call in the Wyckoff method, it's known as the automatic rally. So you'll have a selling climax. So as it comes down in stage 4, we'll hit a selling climax, and then you have an automatic rally, which is you change your behavior. So selling climax, you automatic rally, and then it starts. You tend to go into a secondary test, whether it tests the bottom of the range, or whether it starts to form a base structure, and then you might have a spring type action and move up and out. But it can take a while to form a full base. So at the moment, we are still only early in stage 1, although we have been forming a base now for 3 or 4 months in the software group. But it's much smaller than some of the other bases that we've seen in other areas of the market. So it is an earlier phase, and so still looking for this to develop further. Right, let's move on to